Okay, dear students, I'm Abil Ahmed, CEO and Principal of Abil School of Accountancy. First of all, I really welcome all of you in our very first live revision class of ATX. The session is this class is for the session June 2026, and we will be discussing Finance Act 2025. Okay. And before I start the class, let me just quickly tell you what are the objectives of conducting these live revision classes. The first objective which we have in these classes is to cover the entire ATX within just 8 to 9 hours. Of course, that will be a revision, and that revision will cover the entire ATX within 8 to 9 hours. Second objective, we will be discussing plenty of, I would say, Kaplan kit questions during our live revision classes. Timings and days of those live revision classes will be announced in relevant WhatsApp groups. Third objective of these live revision classes towards near to the exam is we also discuss ACCA pre-seen mock in our live revision classes. So let's just start a very first live revision class. In today's class, we'll be discussing the basic basic income tax calculation, and few basic areas we'll be revising it. First of all, it's just a first live revision class, so I'll make sure this class should not be very long. Student, I hope everyone can see this. Tax rate limits and everything. The good thing is, as far as your personal allowance 12,570 is concerned, tax rates are concerned, everything is same in FA 2024 and 25. No change at all. Okay, now, when it comes to applying the tax rates, first of all, we apply tax rate on non-saving incomes. Then we go for saving income, and finally we apply the tax rate on dividend income. This is the sequence which we normally follow. First, you will go for non-saving income to apply the income tax rate. If I quickly give you the examples of non-saving income, for example, employment income, for example, property income, for example, trading income, if I am a self-employed person, even the pension income also falls in non-saving income. When we talk about saving income is very simply interest income is your saving income. And dividend income, by the name, it is very clear. Dividend income, that's it. Now, relating to saving income, you cannot directly apply any tax rate on the saving income, even though if you see that saving income basic rate band 20%, then we have 40, then 45. Even though income tax rates, they are exactly same in non-saving and saving, but within this saving income, we do have few additional rules. Number one, if someone is a basic rate taxpayer, whoever is a basic rate taxpayer gets nil rate band of £1,000 for the saving income. If someone is a higher rate taxpayer, means having taxable income more than the limit of basic rate band, that individual gets nil rate band of £500 for their saving income. Someone who is an additional rate taxpayer means having taxable income more than 1,25,140, more than that is a, if someone who is having taxable income more than 1,25,140, more than that means someone is having 125,141 and above, that person is an additional rate taxpayer. Whoever is an additional rate taxpayer and that person assuming is also having saving income, then nil rate band will be 0. So simply, additional rate taxpayer does not get any nil rate band for their saving income. Now, when it comes to dividend income, every individual, irrespective of their tax paying status, every individual gets nil rate band of £500. Every individual gets nil rate band of £500 for the dividend income, irrespective of their tax paying status. And one more thing, all these tax rate, the table which you can see here, this table will be given to you in exam. Obviously, when you practice, after I would say practicing few questions, automatically you would remember these limits. But if someone is finding difficulties in memorizing these limits, then that student should not be worried. Why? Because this table will be given to you in exam. And following are the tax rate. In the tax rate 25, 26. Let me bring the question now. Okay, students. Let's deal with the first practice question. You can see that test for understanding 2. Property income is a non-saving income. Bank interest, of course, is saving income, and dividend is dividend income. Calculate case income tax liability for the tax year 25, 26. So let's come here. We are doing test your understanding 2. You can see in the question we have property income, which is a non-saving income. We have got saving income, and we do have dividend income as well. So let's make 4 columns. One is for the non-saving, non-saving income. Second is your saving incomes. Third one is your simply dividend income. One more column for the total. Property income, of course, is your non-saving income. Property income is 40,000. Falls here as well. Okay. Bank interest, obviously, the saving income is 2,000. Dividend income is dividend income. The amount is 10,500. Simply will get total income. $40,000. Here I'll get 2,000, then simply 10,500. Here, student, we can use the sum formula. And you should be using only those shortcuts in your practice which are available in exam. If you're using any shortcut which is not available in exam, then obviously there's no benefit at all. Now, should recall personal allowance is 12,570. The normal sequence of utilizing the personal allowance is first we deduct the personal allowance against the non-saving income. If you still have personal allowance, then we'll go for saving income, and finally we deduct the personal allowance from the dividend income. That's a normal sequence. Repeat. The normal sequence of utilizing the personal allowances, first we deduct the personal allowance from the non-saving income, then we go for saving, and finally we go for dividend income. That's a normal sequence, okay? In today's class, don't worry at all, I'll be discussing another situation as well in which it is not necessary to follow the normal sequence of allocating the personal allowance. We'll come to that, but right now, just focus on this test your understanding 2. And the normal, let me repeat, the normal sequence of utilizing the personal allowances, first we deduct the personal allowance against the non-saving income, then we go for saving, and finally dividend income. So less personal allowance, which is 12,570. Okay. After deducting the personal allowance, you will get taxable income. 40,000 plus this. Now the option of drag will work. So student, we have calculated the taxable income. Now listen, When we apply the income tax rates are always applied sequentially. And the sequence is, first you have to apply the income tax rate on non-saving income. Then you will go for saving income, and finally you will go for dividend income. That's a sequence which you have to follow while applying the income tax rates. Okay. Let's calculate income tax. First, I'll go for non-saving. Entire 27,430 actually falls in basic rate band. Applicable tax rate in basic rate band is 20%. And don't worry at all. In coming question, students, I'll give you the opportunity to solve and share the answers with me. We have done with the non-saving income. Now, students, before applying any tax rate on the saving income, which is 2,000, you have to see the individual's tax paying status. And how do we decide individual's tax paying status? We decide the individual tax paying status on the basis of total taxable income. Student, you can see that total taxable income of KE is 39,930, which is more than the basic rate band. Of course, it is not exceeding the high rate band, but it is more than the basic rate band. So this individual is a higher rate taxpayer. Whoever is a higher rate taxpayer gets nil rate band of £500 for the saving income. Now let me tell you one thing. Now some of the students, they make mistake. How do they make mistake in this area? They actually, instead of deciding like this, which I've just discussed with you, that how do we decide the individual's tax paying status? We always decide the individual's tax paying status on the basis of total taxable income. And you can see that total taxable income is 39,930, which is more than the basic rate band. Now, no matter you have a space in the basic rate band, either you have the space in the basic rate band or you do not have the basic space in the basic rate band. That is not the criteria of deciding the nil rate band. Actually, the nil rate band is decided on the basis of total taxable income. Total taxable income is more than the basic rate band. So this individual is a higher rate taxpayer. That is why saving income nil rate band 500 is available. Some of the students, they get confused and they think like they think that, sir, we have a space in the basic rate band, so why we are not going for nil rate band 1000? That is incorrect. So basically, individual's tax paying status is always decided on the basis of total taxable income. Here, the total taxable income is 39,930, which is more than the basic rate band. So that is why this individual gets nil rate band £500 for their saving income. So here comes the saving income. Saving nil rate band 500, 0% into this. Now, some of the students, they think in another direction also. They think like that, sir, 500 multiplied with 0% gives us 0. So what if I skip that? And let's say I just keep in my mind that out of 2000 saving income, 500 I've taken in the nil rate band, and I do not show to my examiner, because that student thinks that what is the point of showing this to the examiner, because at the end of the day we are getting zero answer, ultimately, which will have no impact on my income tax liability. So listen to me carefully. If you're not showing your examiner 500 into 0%, which answer is 0, and you're not showing that 0 calculation, then that's guarantee you will get 0 marks. So by showing the calculation, how did you get this 0? You will get 0.5 marks. So look at the importance of 0 also. Normally we believe that 0, they do not have any importance, but here we do have 0 does have an importance, and that importance is by showing the calculation of this 0. How did you get 0? You will get 0.5 marks, and every mark is very important, even it is 0.5. So please There's no need to show your smartness while sitting in exam. Do not impress your examiner by skipping few steps. The main thing is you have to properly get the answer. Okay, so you have to show this calculation. Now the remaining saving income, of course, falls in basic rate band, because basic rate band fully we have not utilized yet. 2000 out of this 2000 500 we have taken in nil rate band, remaining is 1500 and applicable rate is 20%. Okay. Now, students, we'll go for dividend income. As I mentioned earlier also, every individual, when we say every individual, means everyone. Every individual, irrespective of their tax paying status, every individual gets nil rate band of £500 for their dividend income. So first, let me just write dividend income, dividend nil rate band, which is 500, 0%. Okay, now student, you have to now check how much space is left in the basic rate band, because the total taxable income is 39,930, which means that obviously some of the income will definitely fall in higher rate band. So how much space is left in the basic rate band? Because the remaining 10,000 dividend income, total taxable dividend income is 10,500. Out of that 10,500 students, we have taken 500 in nil rate band. We are left with 10,000. But that's for guaranteed, that's for sure. Entire remaining 10,000 does not fall in the basic rate band. Can we write an abbreviation? Yes, I think I'm writing this. There's a question from the student, can we write dividend nil rate band in abbreviation? I think you can see that I'm writing. So you will, yes, 100% acceptable. This sort of abbreviations are acceptable because these are very common. Okay. So you should go for this dividend nil rate band abbreviation, and for the saving income also. It does not mean that you go for extraordinary. If you are bringing new abbreviations, that will not be acceptable. Otherwise, where I'm using abbreviation, it means that is allowable in exam as well. Let's make it like that. Now let us see, student, how much space is left in the basic rate band. There are number of ways to decide this, but let me just show you one working. Student, basic rate band is 37,000. This is the basic rate band. Okay. Now, how much basic rate band is remaining? Let me show you that. This, then minus, we have used this, we have used 500, we have utilized 1500, we have utilized this as well. So students, the remaining basic rate band limit is 7770. And this 7770, it means dividend income, basic rate, and let me show the working reference here also. Now it is okay. Student, whenever you are showing something through working, so there are two instructions to follow. One, you have to properly show the reference of the working. Second, try to create the link where it is, of course, possible. Do not go for direct steps. So 7770 of the dividend income actually falls in basic rate band. Dividend income basic rate band applicable tax rate is 8.75%. And let me repeat again for you, these tax rates, they will be given to you in exam. Obviously, the remaining dividend income falls in high rate band. Remaining Dividend income actually falls in higher rate band. Higher rate. Dividend income is 10,500. We have utilized 500 here. We have utilized 7770. So 2230 actually falls in high rate band where applicable rate is 33.75%. Now let's add all of them. You will get income tax liability. Again, you should be using a sum formula here. Students, we are getting final answer, we are getting 7,218.5. I strongly believe this calculation should not disturb you if you have at least covered, I would say, just 3 to 4 lectures in our ATX classes. Then obviously this area, you should be very good in this area. Because if you recall, in our first 3 to 4 classes, we just did one thing. This is how to calculate income tax liability. Okay, just a minute. Just a minute. Okay, sure. Now, sure. One more thing. Let me go back to the. Just a minute. Okay, let me just show here. Sure. In UK, you will be paying income tax on your income which is over and above 12,570 because personal allowance is 12,570. So you can see in this question also, which we have just done it, we did not apply the tax on entire income. First, we deducted the personal allowance 12,570. After that, we got taxable income. On that taxable income, actually, we applied tax rates. So individuals in UK, they do pay tax, but they pay tax after deducting the personal allowance. Now, what is the objective of introducing personal allowance 12,570? According to the, I would say, you can say UK government or UK Taxation Authority, which is HMRC, they believe that whoever is earning less than 12,570 should not be paying actually income tax in UK. That person is considered simply, you can say that person is considered as a poor person because he's not earning a good amount of money. So why should that person pay income tax? Which makes sense also. So only those individuals should be paying income tax in UK if their earning is more than 12,570 pounds. Okay, fine. This is the objective of personal allowance. Why they have introduced personal allowance, so that they should not be asking a tax to a person who is even earning less than 12,570. But the question is, what about those individuals? They are very wealthy individuals. If there are, obviously in every society you will have ultra rich people also. So what about those ultra rich people? What about those people? They have got big pockets, they are very wealthy. So will they also be getting the personal allowance? Then if they are also getting a benefit from the personal allowance, then there will be a good there will be a question mark on HMRC. Why you are providing a benefit to those people? They are very wealthy. Why they are also getting personal allowance? So that is why HMRC come up with the solution. The solution is, the name of the solution is ANI, adjusted net income. Whoever is having adjusted net income, I'll write the format as well. Don't worry at all. Whoever is having adjusted net income more than 1 lakh, whoever is having adjusted net income more than 1 lakh, for that individual, personal allowance will reduce. Obviously, HMRC does not want those ultra rich people to get the benefit of personal allowance. So simply, if your adjusted net income is more than 1 lakh pound, then your personal allowance will reduce. In fact, if someone is having a just Just a minute. Why it is disturbing? If someone is having adjusted net income more than equal to 1,25,140, if someone is having adjusted net income 1,25,140 or more, that person will have personal allowance 0. So actually, HMRC is not in a mood to give personal allowance benefit to the ultra rich people. So if someone is having adjusted net income more than equal to 1,25,140 will get personal allowance 0. Now the question is, how do we calculate ANI number one, and what is the formula of reducing the personal allowance? First of all, the format of ANI. Adjusted net income, students. You will take net income. Net income is total of all different sources of income. From this, we will deduct simply gross personal pension contribution. Gross personal pension contribution. You will get ANI. In taxation paper, we also deduct gross gifted donation, but deducting the gross gifted donation while calculating ANI is not examinable in ATX. That is why I did not write here gross gifted donation. Net income minus gross personal pension contribution, you will get ANI. Now, what is the formula? The formula is very simple. Personal allowance 12,570 less ANI. Of course, ANI has to be more than 1 lakh minus 1 lakh. 50% of that. Maximum your personal allowance could be 0, but your personal allowance cannot be negative. Maximum your personal allowance could be 0, but it cannot be negative. And when it becomes 0, mathematically, if your adjusted net income is 1,25,140 or more than that, then your personal allowance actually becomes 0. Okay. And if you recall the gross personal pension contribution, what is personal pension contribution? Personal pension contribution is simply an insurance policy which individual has taken for him or herself. According to HMRC, whoever contributes in personal pension contribution, that is treated as 80%. 20% will be paid by HMRC. Another benefit of personal pension contribution is by the gross PPC, your basic and high rate band limits will increase. And third benefit of ANI or tax consequences of gross PPC is it reduces your ANI, it reduces your adjusted net income. So there are 3 tax implications of personal pension scheme, personal pension contribution, which you should know that, which every ATX student should know. Number 1, whatever individual contributes in personal pension, it is treated as 80%, 20% will be paid by HMRC. The second is basic and high rate band will increase by gross PPC. And the third is gross personal pension contribution actually reduces ANI. So these are the 3 tax implications. Now let me tell you one thing. Even here these are the 3 only tax implication of gross PPC. Some of the students even make mistake in gross PPC. How do they make mistake in gross PPC? For example, we are calculating income tax liability for Mr. Y, okay? An examiner says there is a gross personal pension contribution by Mr. Y, which is 10,000 pound, assuming. Some of the student, I don't know why, what do? They deduct that contribution from the individual income of that Mr. Y, which is incorrect. When you gross personal pension contribution is not your deductible expense. So you cannot deduct simply gross personal pension contribution is not your deductible expense. It is not an expense for you. Why? Then the question is why students they deduct gross PPC while calculating income tax, I would say liability. I believe there's only one reason. They actually, I would say, forget, or they actually, they swap the concept of gross PPC with the occupational pension contribution. If you are an employee and you are contributing in occupational pension plan, that contribution will reduce your employment income. But even you are an employee and you are contributing in personal pension, contribution in personal pension will not reduce your income. It's not a deductible expense. But if you are a member of member of an occupational pension plan and you are contributing in occupational pension plan, then that contribution is a deductible expense and that will be deducted from your employment income. So what I believe why students make mistake in this, when they actually replace the concept of gross PPC with occupational, when they mix the concept, then they make mistake. Otherwise, if you are not mixing the concept, you will never make mistake. Now let's come here. Okay, student, let's see the test on understanding 3. Francisco has an annual salary 1,30,000. Okay, there's a question from the students. I think there's a question from the student. What about the gifted donation, students? I think I did mention, and let me repeat it again. Gross gift aid donation is not examinable in ATX. That is why, while calculating ANI, I did not consider gross gifted donation. Otherwise, let me tell you one thing. Tax implications. Tax implications of gross gift aid donation, they are exactly same like gross PPC. Gross gifted donation is not examinable in ATX. Otherwise, tax implications of gross gifted donation and gross PPC, they are exactly same. Okay, I have answered the question. Francisco has an annual salary of 1,30,000 and made a gross personal pension contribution. Let me tell you one thing more, students. If nothing is mentioned, only examiner says personal pension contribution. If nothing is mentioned, either it is net or gross, then we always assume it is net. You have to gross it up. How do we gross? Multiply by 100 divided by 80. Whenever examiner gives you a gross PPC, then the word gross examiner will mention. If nothing is mentioned, then whatever amount is given for the personal pension, it is treated as 80%. Whenever it is gross, it will be mentioned in the question. Francisca has an annual salary 130, made a categorically written gross personal pension contribution is 19. Calculate Francisca's taxable income. They're not asking to calculate income tax liability, they're just asking give us taxable income. Taxable income means from this annual salary, which is the only income, you need to deduct personal allowance. But obviously, we have to see ANI. If ANI is more than 1 lakh, then personal allowance will not be 12,570, it will be less than that. So let's solve this. Test your understanding 3. Annual salary. Let me take 1,30,000. Simply we'll deduct personal allowance. Working one. Let me just show the working one here. ANI, adjusted net income, students. Annual salary is the only income, so this becomes your net income. From this net income, we will deduct gross personal pension contribution, which is 19,000. Here comes ANI. Student, you can see that adjusted net income is more than 1 lakh. So obviously personal allowance will reduce. Normally the personal allowance is 12,570. Less, this individual will not get the same personal allowance. ANA minus 1 lakh, bracket close into 50%. So how much personal allowance Francisco will get? Student, Francisco will get the personal allowance of 7070, 7070. So come here, I'll deduct this. So simply they're asking taxable income. Here comes the taxable income. And student, let me tell you, this is the first live revision class, so that will not be so long. But from a second class onwards, you will see that live revision class duration will increase, and it will definitely increase because we have to cover the entire course revision, and plus, as I mentioned, we'll be practicing Kaplan kit questions also. So I'll give the opportunity to those students, they have time, they can come online in live classes, and you can discuss uh, Kaplan kit, latest Kaplan kit questions. Now let's go for test your understanding. For Met Matthew, earn employment income 1,37,700, receive interest is 22,300, dividend is 17,000. Now this time student, they are asking calculate income tax liability for the tax year 25-26. I cannot see, there is no gross personal pension contribution. So obviously 1,37,700 plus 22,300 plus 17,000 all becomes the net income, and all becomes the adjusted net income as well. And obviously the final answer of Meto is far more than 1,25,140. So this individual will not get any personal allowance. Students, I'm giving you 5 minutes. I want every one of you to try and give me the answer of test your understanding for. Time which I can see is 3:16. So you have a 5 minutes to do it. Let me pause the video. So the video should not become unnecessarily very long. But it's my request, everyone should attempt this question. Students, any answer before we start solving this test your understanding for? Student, nobody has given any answer, which is quite surprising. Okay, let's solve it quickly to save the time. Non-saving income. Then we'll go for saving incomes. Dividend income. Finally, total. Student, just to save the time, I'm directly writing the values. Otherwise, we know that first you have to write the employment income under the non-saving income, then in the column of total. Then you will be writing saving income under the column of saving income, then in the column of total and dividend income. But just to save the time, 1,37,700. Saving income is 22,300. Dividend income is 17,000. Let's take the total. Student, you can see that total is 1,77,000, which is far more than 125. So let me do one thing. Less personal allowance bracket. We'll mention our examiner ANI is more than 125,140. That is why personal allowance becomes 0. But you have to either you show that in a working somewhere, but somehow you have to show your examiner why you are taking personal allowance 0. If you are directly writing personal allowance 0 and you're not showing why did you write 0, then you will be getting 0 marks. But if you're showing the reason of while you are taking personal allowance 0, you will be getting 0.5 marks. So again, I'm just telling you the importance of 0. Sometime writing 0 gives you the 0.5 marks, which is very important. So here comes the taxable income. Now, students, income tax. First, you have to apply tax rates on non-saving incomes. After that, of course, saving, and finally, dividend income. Non-savings. Basic rate, which is now you can see that taxable income even in the column of non-saving is far more than the higher rate band. So 37,700 entire basic rate band is utilized by the non-saving income. Again, non-saving, higher rate. Student, 1,25,140 minus the basic rate band limit. So in the higher rate, amount which falls is 87,440. Applicable tax rate is 40%. But students, again, I'm very surprised that none of you have given me the answer of this test you're understanding for. Now, student, still we have not taxed the entire non-saving income. Some of the non-saving income also falls in additional rate where applicable rate is 45%. Once again, non-saving, additional rate. 1,37,700 minus 125,140. 12,560 actually falls in additional rate band. Now, students will go for saving income, and this individual is an additional rate taxpayer. Whoever is an additional rate taxpayer does not get any nil rate band for their saving income. Saving income, additional rate. The entire 22,300 falls in additional rate. Applicable rate is 45%. Now, student, we'll go for dividend income. And for dividend income, I have said this, I think, many times. No matter whatever is your tax paying status, every individual, irrespective of their tax paying status, every individual, irrespective of their tax paying status, gets dividend nil rate band of £500, which means that this individual will also get nil rate band for the dividend income. So dividend nil rate band, £500 into 0%. Of course, the remaining dividend income, which is 16,500, falls in additional rate band. And in case of dividend income, additional rate is 39.35%. And let me repeat it again for you. All the tax rates with their limits, they will be given to you in exam. 39.35%. Let us simply add all of them. Income tax liability. Let us use the sum formula. Students, income tax liability, we're getting 64,695.8. Okay. Now, how do we normally utilize the personal allowance? Students, the normal sequence of utilizing the personal allowance is first we deduct the personal allowance against the non-saving income, then I'll go for saving, and finally I'll go for dividend income. But according to HMRC, you can change the personal allowance allocation provided that due to that change in personal allowance allocation, you will be saving tax. If you are saving tax due to bringing a change in the personal allowance allocation, go ahead. Now the question is, when I'm going to change personal allowance allocation sequence, and what would be that change sequence? First of all, let me just give you a recap of starting rate band for the saving income. In saving is income, student, we have a starting rate band also. First 5,000 pound in the starting rate band, applicable rate is 0%. But let me tell you one thing. In saving income, starting rate band issue only arises. In saving income, starting rate band issue only arises when in the column of non-saving, after deducting personal allowance, your taxable income is less than 5,000 pound. So whenever in the column of non-saving, your taxable income is less than 5,000 pound, then starting rate band will also apply on the saving income. For example, okay, assuming non-saving, whatever amount of income is given, I have to deduct the personal allowance, 12,570. Then we'll get taxable income. If your taxable income is less than 5,000 pound, then you will get a starting rate band. Now, for example, just a minute, non-saving, taxable income. Assuming taxable income in the column of non-saving after deducting the personal allowance is 2,000. If this is the case, starting rate band, you will get a starting rate band of 3,000. If your taxable income, for example, in the column of non-saving after deducting the personal allowance, assuming it is 1,000, then you will get a starting rate band. Then obviously the remaining limit in the starting rate band is only 4,000. Even though on this 1,000 I'll apply 20%, on this 4,000 I'll apply 0%. On this 2,000 I will apply 20% because of non-saving. On this 3,000 I'll apply 0%. One more possibility, if in the column of non-saving after deducting the personal allowance, assuming your taxable income is 4,500, then you will get starting rate band of 500. But look at this, on this 4,500 I'll apply 20%, here I'll apply 0%. But if in the column of tax, in the column of non-saving after deducting the personal allowance, if your taxable income is more than either it is 5,000 pound or more than that, then you will not get any starting rate band. For example, if your answer is here, either it is 5,000 or more, then you will not get any starting rate band. If you check the test your understanding 2, when we solved test your understanding 2, I did not discuss anything regarding starting rate band. Even when we did test your understanding 3, we did not discuss anything about starting rate band. Even the test your understanding 4, which was, I would say, longest of all, we did not discuss anything about starting rate band, because in all these questions, taxable income in the column of non-saving was far more than 5,000 pound. So actually starting rate band for the saving income comes into action only when your taxable income in the column of non-saving after deducting the personal allowance is less than 5,000 pound, only then the starting rate band issue arises. Otherwise, obviously starting rate band will not arise. That is why all those questions which we have discussed, we did not talk about starting rate band, because in every question your taxable income in the column of non-saving was more than £5,000. So this starting rate band is something in addition to the nil rate band. So when it comes to saving income, individual also gets starting rate band, but there's a condition. You will only get the starting rate band for your saving income when your taxable income in the column of non-saving is less than £5,000. You will also get the nil rate band. If you are a basic rate taxpayer, then you get a nil rate band for the saving income £1,000. If you are a higher rate taxpayer, you will get nil rate band £500 for your saving income. If you are an additional rate taxpayer, then you do not get any nil rate band for your saving income. Now let me just write a normal allocation of personal allowance. The normal sequence is non-saving, saving income and dividend income. Students, the normal personal allowance allocation sequence is number 1, 2 and 3. This is a normal personal allowance allocation sequence. First, I'll be deducting the personal allowance from the non-saving. If I still have personal allowance, there's a possibility that non-saving income is far more less than the personal allowance. If you still have personal allowance, go for saving income. And by chance, rarely it happens, but let's say it happened that even still personal allowance is left, go for the dividend income. But the question is, when do I need to change this personal allowance allocation sequence, and what is that change? Let me show you non-saving, saving and dividend income. The change of personal allowance allocation sequences, number 1 remains same, number 2 becomes dividend income, and number 3 becomes saving income. Now the question is, when I'm going to follow the second way of allocating, or second presentation of utilizing the personal allowance. Listen to me carefully. Whenever a student you come across a question where your entire saving income falls in the starting rate band, whenever you come across a question where the entire saving income falls in a starting rate band, then you should change the personal allowance allocation sequence. Because if your entire saving income falls in a starting rate band, your applicable rate is 0%. If you're deducting a personal allowance from the income on which applicable rate is 0%, so logically you are wasting your personal allowance, because I'm not getting any tax saving when I'm deducting a personal allowance from the income on which I'm going to apply the tax rate 0%. So that is why the logic is, then you should change your personal allowance allocation sequence. First deduct from the non-saving and then go for the dividend income. Let me show you the question. Yes, you can see that. Allocation of personal allowance. Look at this, pension income is a non-saving income. Saving income is only 5,000. So entire saving income actually falls in starting rate band. Then I've got a dividend income which is 13,000. So now first we'll be deducting a personal allowance against the pension income, 7570. Remaining personal allowance I'll be deducting as against the dividend income. So whenever you come across a question where the entire saving income actually falls in starting rate band, then you should change personal allowance sequence. Let me show you next page if we have. Just a minute. Okay. Student, let's try this. Now, student, I want every one of you to try test your understanding 5. Calculate Anaya's, if I'm not wrong, Anna's income tax liability for the tax year 25-26. Allocate the personal allowance to the different source of income. Let me tell you, student, one thing. In the most beneficial order, this will not be mentioned in exam. In exam, if you come across a question where the saving income falls in a starting rate band, you need to know that I have to change the personal allowance sequence. Here they have categorically mentioned, they have given you the enough hint to change the sequence of personal allowance. But in exam, you should not be expecting the same thing in exam. No. Your examiner will never give you any hint of in the requirement to change the personal allowance sequence. Of course, by looking at the data, you should be in a position to recall Yes, now I should be changing my personal allowance allocation sequence. So students, I'm giving you 3 minutes. Within 3 minutes, now this time I need answers from you. I want every one of you to attempt this question. Test your understanding 5. And let's take this test your understanding 5 as the last question of today's class, because as I mentioned earlier also, it's the first live revision class. So I don't want the live revision class to be very long, even though the list is very long, but I'm not discussing all those things. And it's Ramzan as well. So students, kindly solve this, and you have 3 minutes. Exact 3 minutes I'm giving you. Resume recording. Okay, test your understanding 5. Test your understanding 5. Non-savings, then savings income. Finally, I'll get the total. Again, student, just to save the time, I'm directly writing. Employment income is a non-saving income. We know that saving income they have given us 4,200. Dividend income is 12,000. Here comes the total. Now, student, we'll change the sequence because let me tell you. Personal allowance, I'll deduct 6,800. Student, we do have the personal allowance, and logically, we don't have any taxable income in the column of non-saving. It means entire 5,000 starting rate band is available. And if you look at the saving income, 4,200 actually falls, entire 4,200 is covered in the starting rate band. If any one of us deducts the remaining personal allowance from the saving income, so logically you will be wasting your personal allowance. That deduction of personal allowance from the saving income will not save any tax for you, because you are not already paying any tax on this 4,200, because entire 4,200 is covered in the starting rate band where I'll be applying only 0%. In that case, remaining personal allowance 12,570. Just a minute. Something is wrong. So this remaining personal allowance I will actually deduct from the dividend income. Here comes your taxable income. So entire 4,200 actually falls in starting rate band. Income tax, saving income, simply starting rate. Entire 4,200 actually falls in starting rate. Applicable rate is 0%. Now, students, we know that every individual gets nil rate band of 500 for their dividend income, irrespective of their tax paying status. So, dividend nil rate band. Okay. The remaining dividend income actually falls in basic rate. $6,230 minus 500. Applicable rate for dividend income basic rate is 8.75%. So here comes your income. Simply if I use some formula, even I'm not using the formula, I know that what I'm getting. So students' income tax liability is 501.375, or make it 501. So students, that is all about today's first live revision class, Finance Sec 2025. So to determine basic rate band of interest income, do we have to ignore to decide basic rate band of interest income? Where did I ignore the dividend income, students? My question is, where did I ignore the dividend income? If you look at the non-saving income, taxable income in the column of non-saving, it is zero, which means entire starting rate band is available. And due to that availability of a starting rate band, on 4,200, you will be applying 0%. Total taxable income is Total taxable income is 10,430. Why you are getting a different value? Yes, it is 10,430. Now you will be applying the income tax rates, okay? First you will go for non-saving, it is 0. It is 0. Then I'll apply the tax rate on saving income. And entire saving income actually falls in a starting rate band, where applicable rate is 0%. After that, when we apply income tax rate, the sequence of applying the income tax rates, it remains same. Non-saving, saving and dividend. So is that clear to you? Or still if you have confusion, you can, okay, it is clear, that's great. Otherwise, you could have asked in your relevant WhatsApp groups. So students, that is all about first live revision class, ATX Finance Act 2025. Hope to see you and all others in my next live revision class. Class will remain once in a week, but obviously the class duration will increase. And that is all. In coming week, there's going to be Eid. So due to Eid holiday, I think there will be no class. Admin will announce in the library in your WhatsApp groups. Don't worry at all. So thank you very much, and Eid Mubarak in advance to all of you.